Hey guys, welcome to the Double Shot. It is the 13th of December. So some more impressive moves from the market today after the Fed speech. They just kept the rates exactly where they were, but I guess the main message from the Fed was that, they're pretty much prepared to start cutting rates. Jay Powell didn't really commit to a date or anything like that from what I've heard. And he even said that, hey, they're also ready to hike if necessary. So it was more of a kind of a wash. But, some of the dot plots and some of the other members were pretty dovish. So I guess the whole message, or at least what the market interpreted from the speech, was that it's party on, and we're done with the inflation. It's on the kind of the last legs lower, and they want to normalize rates, maybe bring them lower a little bit. So there were a bunch of questions, but the market just didn't even care. They just went bullish into the announcement, and they just continued to break pretty strongly, with Dow actually reaching new all-time highs. So the type of market, as I've been saying a few times, that really it's not giving anybody a chance to get in. If you're positioned, continue, I guess, to tide your stops and just kind of follow along the trend, which is, kind of what you're supposed to do in these situations where the market trends so strongly. But the level of the pullback, it's pretty much non-existent at the moment. So it could be that, this type of a move in here and this type of excitement maybe marks a temporary top in the markets. The market continues to kind of prove how foolish it can make you into anticipating, any sort of a correction here. And I've been saying this for the past couple of weeks, that, we're due for something like that. There were kind of signals from the market, and yet, or at least from some of the indicators, and yet the price, which is the main thing, continues to kind of push to the upside. So we'll see what happens. I don't think this will be a straight shot, as strong as it has already been, right? I mean, this has been quite a big move. And we're due for a correction. It's just a matter of, hey, is it going to happen tomorrow, or is it going to happen in, 2 weeks? So we'll see how we're going to digest this into the end of the week. A couple of things I'm watching definitely is the TNX, which is a 10-year, coming into the 50% retracement of this entire rally from early on in March. And, then we're probably going to, I think overnight futures were already trading below 4% or 395. So I guess maybe we'll have one more push lower towards 383 with a bit more push into the equity markets. And then once we hit the 61.8, I think we're going to find some decent support. We've been rallying in the TNX, for several days, but that not really put a damp on the market in any way. It was just a slight stop in there. And the dollar also sold lower with yields dropping. So it was pretty much a party on for risk assets, with a lot of breakouts to the upside. So let's take a look. I put a couple of counts. So if you read today's piece, you will see, kind of what I went over in terms of main indices, the counts that I make. I'm going to start with the S&P 500 and kind of take you through it a little bit. So I have basically, the one that we've been following for quite a while here, to a wave 4 decline that never got into the 30 of the wave 1. So we called this one pretty well. This decline was a bit tough, right? I mean, the market seemed like, especially down here, that it was going to continue to collapse lower, Black Monday, and, all kind of crazy talk that happened to the end of October. And then as we were rallying out of here, we never really got a proper pullback, right? We thought that, hey, this trend line, will eventually get retested, or maybe this 43.25 level in a more proper way. No, the market went up, consolidated just above 4,500, and then shoot higher once again. So again, it becomes very difficult for me to put a wave 2 here, and I will continue to keep this 4 until we're breaking above the 100%. If we're breaking above 100% of wave 5 versus wave 3, then this wave will be longer, so my count will become invalid. But I do think still there was some kind of a wave 1. So what I've done is I put an alternate count out there, and you'll see it on the note, and this is what it is. It's basically, your same thing. Actually, instead of a 1, 2, 3, 4, 5, which it's what we're betting on with the wave 1 top and then followed by a correction, then we go again. That this is actually a 1, 2, 1, 2, right? In a very massive and kind of awkward looking 1, 2, 1, 2, with wave 1 at a smaller degree being longer than wave 1 at a larger degree. Even this wave is bigger than this. So it's not a very pretty interpretation, but let's just kind of play along and go with it. And then that would be wave 1 and a wave 2. And as short and shallow as this looks, my goodness, that means that we would continue to kind of rip to the upside. Or even I can even take this down and put it here for a 1, 2, and then if we do 3, 4, and 5, we're back, at what I was discussing just at the count before, which means that we're going to get a top fairly soon. If this is another 1, 2, 1, 2, then there's a lot more to go, and there's no way of exactly knowing when this is going to go. But in situations like this, if you're long, this was kind of one level to protect yourself against, and that's another level to protect, and you just kind of keep traveling along until some of these levels get taken out, and then you're just kind of getting out of that position if you're lucky enough to kind of have it. So this is kind of the look that's more, I would say, let's say ultra bullish, right? Just through a series of 1s and 2s with very minimal correction, and then you continue to go higher. I don't know if this is, if the market can really sustain this. I mean, what would be next? You would have to do, let's just kind of play along, right? If that's a 1, 2, then you're probably going to have a wave 1, maybe another small 2, a 3, a 4, and a 5, then another 1, and you keep going like that. I mean, is this, really a sustainable move? I mean, I don't think so, but if you look back here, if the market kind of starts trending, you get into these smaller pullbacks, and you're not really overtaking any of the swings. You're just kind of continue to go. So there could be something like that brewing. Again, we've been used with a lot of chop since the correction, from 2022, and we haven't really gotten into some, beautiful trends. And once the trends start and they go, you're not really getting a lot of correction. So let's see what happens in here. We're gonna see once happens. Once they get to new all-time highs. Again, there are some cycles that I'm still in the back of my mind in terms of worrying about. Them telling us that there is going to be a turn coming up with the VIX as well. Participation today was pretty good, and it kind of continued to push. So the breadth is kind of catching back to the upside. So remains to be seen. But let me show you. Some of the other ones as well. So, if I want to be, if I can be sincere, clearly I was definitely, pretty wrong in thinking and continuing to assume that some kind of a correction here will happen. And I can tell you that the feeling that I have right now, it's that of my goodness, this market will just continue to go. What is it doing here? It's making me kind of work the counts and, not really playing ball. So that is the time, in terms of sentiment, where things can kind of start to top out, because, I look kind of, do a little bit of self-reflection, and I start to kind of be fearful that this will never pull back almost, right? That's kind of what I'm talking here. And that's exactly the time, and that's exactly how the market makes you, kind of chase or become bullish, and then all of a sudden, it turns back. So just kind of, there's just a little bit of be aware of your own thoughts as you're looking at the market. So anyway, let me just go to NDX. Same thing on this guy, right? We're still kind of tracking that 1, 2, 1, 2, 3, 4, 5 with either a wave 1 top, just like in the S&P 500, or a wave 3 still from this wave 2, right? We're still missing that, because this is a beautiful move. And if this is not a third wave, I don't know what is. So again, if that's a third, then that's got to be a 4. So based on this, we should be topping out fairly soon. I guess that's wave 5. We don't get that proper divergence that I usually like to get between 3 and 5, so that's an issue. So let's see, let's see kind of how it goes. But fairly soon, I mean, we get equality about 16,969 between wave 1 at this degree of trend and this wave 5. So that would be a good bet that the market could probably stop around those levels, just overtake to new all-time highs and then start to turn back in a fourth wave, not sell a whole lot, but then come back, correct, and then go back again. And then the alternate is this, where you're kind of forced to switch it a little bit and just go with the truncation move in here, and instead of the bottom being here, it's actually here, so you can have a clean 5-wave move, and you go in a 1 2 1 2 3 small 4, which I hate, another small 4, which I hate even more compared with this big 2, to give you that internal structure in a 1 2 3 4 and 1 2 3 small 4 up in 5 for a wave 5 of 1. And then this whole thing, instead of being a 4, right, like I'm betting that it is back here, it's actually a 2, and I've misread this thing in here, or the market just plays these waves in a way different way that kind of what Elliott wave teaches us in terms of structure and pattern and the right look and all of that, right, which is the market's right to do anything it wants, and then you go from this wave 2 low to another 1 2, and then you're on to this larger third wave, which will be another 1 2 3 4 and 5, and then you kind of keep grinding higher until you're eventually reaching a top third. But that means again a breakout, and that's how you just kind of stay. I don't think that's a B wave because it's too sharp. I was thinking A B down in C off a flat. I don't know, probably not, but even such a short wave 2 in here seems so wave 2s are usually 50 to 61%. So, what is this? So that's kind of what goes in the back of my mind in here. Is this really a wave 2? And then you're starting to rip. Let's see. Then we go into Dow Jones, and then I think I'll do Russell as well. So again, these two. So this is different because that's what I said. I was going to explain some of these counts, and basically this one, right, has a different look, and we've talked about this for quite a while in this ABC. And if you think back in the summer, if you were here, early summer, late spring, we were talking about this as a second wave. We kind of called that, and then we went up to a wave 1, and then we said, interesting, 1 2. Then we labeled this as a 1 2 1 2, and I said, especially after this move kind of started to happen, I said I think the Dow will be the first market that will break to new all-time highs this year. And this was based on this beautiful formation, right? You correct, you go into 1 2, you come back, you go up, and then you're getting ready to go. Now, what had happened was you went up to 35,679, and then all of a sudden you rolled over into that correction back in July, at the end of July, and then you corrected all the way to October. You turn everybody bearish with a break below this, something that we never actually believed in as we was kind of approaching these levels. We said it's time to kind of get back bullish, and the market again just did not give any chance of a further correction, to give you even a chance to kind of count it properly. So we did new all-time highs today, but it came in a very awkward form, right? By first rallying, then dropping again, and then going up. So a little bit of a bittersweet, but here we are, and so correct in the in the overall direction of the market, but suffering some of these intermediate legs in here. So now this is the cleanest 5-wave move. It's even cleaner than in the S&P and in the NASDAQ. So because where are you going to place a wave 2 here? You're going to have to go 1 2 1 2, or how are you going to count this, right? You're going to go all the way up here with the small 2 and then go. So I think Dow is basically the one that's actually signaling almost, that this is approaching an end to this 5 waves. And yeah, there is no divergence in the RSI. This RSI is higher than this, and usually you get that in the 5th wave. So we'll just have to wait and see. Maybe just a full-on series of I don't know, 1 2 1 2 3 4 5 4 and 5, but it's we'll continue to kind of keep an eye on it. But the other count is, so based on this, I think we're not far away from getting a second wave pullback. And that's probably going to revisit and retest the tops right here, 35,679 on the correction, back into January. And then, this one, it doesn't have, that extra bullishness like, the S&P and the Dow, the S&P and the NASDAQ have, but it has, a little bit of a different structure here. So instead of a 1-2-1-2, it's more of a 1-3 wave, 3 wave in B, down 5 waves with a little overlap in wave C. And, then you're going again. Even this count shows that a wave 1 should be at hand, right? A little bit a larger degree. So very similar, but the only thing that's different is this move back here, right? And then overall you're supposed to go. So all basically we're waiting for in this market is some kind of a wave second, to proper correction in here to say, this looks pretty good. And then, we can kind of initiate long position for stocks and get ready for a much bigger rally in 2025. Now, of course, when this correction is going to happen, it's going to feel weird to get long because, who knows how that ABC will unfold, and, the news might be bearish, and all of a sudden the inflation kicks up and this and that. And then, that wave second will feel like, you really don't want to get involved because, the news are bad and all that, but that's kind of what the market does, and it makes you think, but then, maybe there's just a temporary blip higher in inflation, creates a sell back, a throwback in the market, yields move up higher, and then that's the moment to kind of get back into the second wave and turn back bullish. So it's all a big game, but and reading it here, it's a constant work day by day. So hopefully this helps. Let me just show you quickly the Russell, which was, it's still a bit awkward. I mean, I don't think there's much of a change in here. The only thing was, at some point we're looking at this as an ABC that kind of got invalidated the moment we move up. So this market actually responded pretty quick and, let us know that it's not an ABC, because you took this high already, and what it looked to be a three-wave move actually transformed in multiple higher highs and higher lows. So I still think that, at least based on what I see on the Dow, that we're probably not far away for completing this wave 5 or 5 of 1 from a 1, 2, 3, 4. And if you measure this wave 3, it's a touch higher than wave 1. So don't come back to me saying that, I'm not counting Elliott wave right because wave 3 is the smallest. I've had that happen, but I always try to count, and that's the first thing I check when I see something that looks almost equal. And equality is fine. It just cannot be smaller than wave 1. And then, you would go in a 1, 2, 3, 4, and maybe a 1, 2, 3, another 4, another 5, and you finish off. Or, the other kind of variant, which is still a bit bullish, but maybe it's got a couple of more legs. It's this, 1, 2, 1, 2, leading in 1, 2, 3, 4, 5, 4, something like that, and you push higher. So that's the Russell for you. So let me take you here to see if I missed anything. I don't want to spend a lot of time, but it definitely was a very strong day. I put these charts on here in the report, so go ahead and check that out. I said I was going to explain them. Gold obviously just, screamed back higher with today's drop in the dollar. I'm still not convinced that this is, like a buyable low in gold. It could be just an ABC. So, but if they're selling back into it and we're sending it that lower, then we know that very likely, that's still maybe a wave 1, or a wave A, B, and then we're still kind of pushing lower below these levels in gold. If you're getting back above 2075 without any pushback, and it starts to look pretty nice and impulsive and builds up on it, then it's likely that it's just a 1, 2, 1, 2, and then hey, you're on to the races in gold and moving above 2200, moving into next year. So that's your gold. And then yields, again, just like I began the conversation with the yields here at about 50, and the dollar also coming back, retesting those lows, maybe even breaking a bit lower. And then here's Bitcoin, which I wanted to touch on. Let me take you to my charts here. So basically, what I've done is, just before I kind of finished up the writing piece, I looked at this equality because I had this move in here, which we were, looking about a month or a couple of months before, when I looked at this equality. So when I checked out this tab, I'm like, goodness, there's an equality here coming in at about 49,922 between this way from the low and this way. So all I did is I just kind of placed it here. So if this is a flat in any way, right? If you go back to a 4-hour and you say, well, that's A, B, and the 1, 2, 3, 4, 5, and you want to move higher, then that's how that happens. And you're probably going to go, and this is probably a wave 1, 2, and you might be doing some kind of a 3, 4, and 5 in a kind of an awkward fashion, a bit slower rate, and you're reaching towards 47, 48, 49 maybe, right? And finishing off equality, and then there's more of a reason to say that's another kind of pretty good target that's going to be followed by a setback. Something tells me that that's not the case, and that they will sell into this rally in Bitcoin. And we talked about this, anticipated this, that there's going to be a slowdown. I talked about it into the updates on Twitter, that at the top of the channel, the couple of swings ever since these levels were kind of happening, that we were going to get them, and then finally we're going to slow down. There's a cycle that's also kind of comes into play, and then we sold off a few days back, $3,000-4,000 drop through what I think it is maybe a small diagonal 1, 2, 3, 4, and 5. I thought that this was a triangle maybe with one more drop, but based on today's move, that's not going to happen. So I think it's fair to say that the fifth wave was this, and then that's an A, and then that was a 3-wave move in B, and then you go 1, 2, 3, 4, maybe one more push into tomorrow, maybe not. But if that's an ABC, then that's a very shallow move, and we should be taking this 40,150 and move lower, right? Which means that correction in wave 2, or at least at the moment, it's actually starting, and that's either a 1, 2, 3, 4, 5, or it's an ABC, ABC, and then you do some kind of a complex move. But definitely watch Bitcoin here, because if it's not able to break back about 44, I think that's a sign that this correction, it's got a lot more to go in time, and maybe even in price. So I appreciate you being here. I think I'm going to put this up on YouTube, so can everybody get my thoughts on the market here. So not just for the Substack subscribers. So I'm going to share this with everyone. So again, I appreciate everyone, and the YouTube channel continues to grow at a pretty strong rate in there. I haven't been putting that many videos out. I was just kind of busy writing, watching the markets, and I got to get back into posting a bit more up there too. But the library of Elliott Way Learning, it's pretty extensive there. So I see people coming back and watching a lot of those videos over and over. So that's a good thing, at least for kind of the information that I put out there. But again, don't forget to maybe put up a thumbs up and leave a comment or something. So I'll talk to you later. Bye bye.